Thank you for downloading Taxpayer Beware. This podcast was created by the California Tax Education Council, a nonprofit organization required by the state of California to protect you against fraud and help you find a legally qualified tax professional. There are 40,000 tax preparers registered with the council, also known as CRTPs. CRTPs are one of only 4 tax professionals approved by the state to do your taxes. Anyone doing business who hasn't met state requirements is breaking the law, and there are thousands doing just that. Now here's your host, Brandon Chanley.
Hi, I'm Brandon Chanley, Chair of the California Tax Education Council, or CTEC for short. Welcome to the Taxpayer Beware podcast. Today's episode, you're facing a tax issue, now what? So it can happen to the most honest of us. It could be fraud, it could be a financial issue, but it happened. You're in a taxing situation. And I think the first thing anybody would ask is there anything I can do about it? What can be done? Joining us for more insight today is Steve Sims. So I'm going to go through Steve's resume here in case people don't know who Steve is, but I have a feeling by this, most of you probably have heard the name. Steve's an award-winning, nationally recognized California income tax expert. He's also an enrolled agent and has over 32 years of experience with the Franchise Tax Board, most notably his 7 years as the Taxpayer Advocate. He also served as the Director of State and Local Tax Controversy in KPMG's Sacramento office for 2 years. Steve is now an independent consultant helping taxpayers facing state tax problems. Some of this includes helping clients get certain penalties waived or helping them through collection issues a lot of us didn't even know we could negotiate. And let's be honest, California's income tax laws are definitely complicated.
Definitely.
Yeah. In some cases, you really do need a professional to help you out. If not in all cases, I think it's advantageous to have a professional. So we want to bring you on to kind of talk, about your experience, things that you've seen. So let's kind of start out with, your work as a taxpayer advocate for the Franchise Tax Board. So you did that for about 7 years. If you could just share with the audience, what were some of the typical issues you dealt with and maybe the most common that people may have?
Oh, okay. Well, first of all, I became taxpayer advocate in 2008, and the advocate's been around a lot longer than that. But once I became the advocate, they wanted the advocate to be a little more visible, wanted to be out working with the public, with business owners, with tax practitioners. I participated in I did a lot of speeches throughout the years. So I basically put myself out there and in a position to kind of hear of many of the issues that you're referring to. First of all, it's important that people understand the role of the taxpayer advocate. Basically, the advocate is to make sure taxpayers' rights are protected, right? I mean, they have what's called the Taxpayer Bill of Rights. I'm not going to get into that. I'm going to allow you to go to the website, or I think one of the other podcasts is going to have the actual advocate on, the current advocate, on the cast. But they have the Taxpayer Bill of Rights. So what that means different things to different people, unfortunately. For the most part, before you involve the advocate, you're supposed to have tried normal channels. When normal channels fail, you go to the advocate because it's not that big of a unit. And if all the taxpayers that are having issues go straight to the taxpayer advocate, they'd be overwhelmed. So in many cases, you may try to go to the advocate, and if you haven't taken certain actions on your own, if you came straight to them, then they might redirect you to another resource, which they actually have to do, because otherwise they wouldn't be able to handle their workload. Now, excuse me. Now, as an advocate, some of the cases that I got involved in, they were there's definitely a need. Just to give you some of the ones that I really felt good in being able to help out, a taxpayer. There was one employer. This guy, he was an employer. He had tax issues with regard to his business. He had balances due, but he also had maybe about 15 employees. And what he would do when it's time to do payroll, he would move money to his bank account so that the money would be able to cover the payroll for the employees. Well, Franchise Tax Board, the involuntary collection cycle, basically that's when, it's pretty much computer assigned. It'll check bank accounts and other, properties, and it's done automated. It doesn't really, know that you have employees. The bottom line is Franchise Tax Board pretty much levied his bank account, and his employees were getting ready to go and try to cash their checks, and money wasn't there. So Franchise Tax Board and the IRS, basically, they have a provision that basically prevents them from levying funds that were intended for payroll. So he was able to come to the advocate. He didn't have time to go to collections because payroll was the very next day. So fortunately, he was able to get a hold of myself. And we were able to, of course, request some documents like prior payroll to show that, okay, how much did you pay in payroll last week or last pay period? Because, I mean, if the amount of the current payroll is $20,000, and then the Franchise Tax Board takes $40,000, and we go to him and say, well, how much is your payroll? And he says $40,000. If he can't show that he paid $40,000 prior, then they'll only release the amount that he paid before, unless he's able to show that they were new hires. So that was a situation where payroll was basically delayed just one day to get that money freed up. But that was a good example right there. So
that was an example where the business owner actually came to you as well.
Well, it was a small business owner. Yeah. You have to understand. I mean, this guy was not a big employer. He's a small business owner, which a lot of your people listening, probably everybody almost owns a small business now of some sort, right? Not all of them have employees, but most people have small businesses. And a mistake he made also was he had some personal taxes due, and he didn't separate his bank account. So he had his personal stuff in his business bank account. It was kind of a mess, but, again, he was able to get the payroll from the prior period, and we freed up the money. Another case involving an individual is there's just a taxpayer, a lady. She's older, elderly, of course, senior citizen. She's on Social Security only, and that's how she survives. However, she needs the help of her son. So her son basically was on her bank account to help write checks and, get the funds that she needed. But what she didn't know is that the son had his own tax liabilities, and she didn't have anything to do with it. And so his name was on that bank account. So they contacted me because they didn't know what to do, because it was time for her to pay her rent, and they took the son's tax liability out of her bank account. So they came to me, and we were able to show that, no, he's just on that account to help take care of his mom, and that the funds that went into that account were only Social Security. So I did have to get at least 1 month's bank statement to show what was deposited in there. Because once again, you have people that will try to use, the grandmother's bank account to put their own money in there, thinking that they won't touch it because it's not my bank account. So, word there is if someone has tax liabilities due, don't put them on your bank account.
Guilt by association, right?
You're doggone right, because this whole product, involuntary collect, it's automated. No one's going to call you up and say, hey, is this your money? Right. They're not going to do that. They see the money there. Your name's on the account. They'll hold it, though. They don't just transfer the money over. What happens is the bank puts a hold on the money, and they notify you, and you have a certain number of days, usually 7 to 10 days, to get back to the bank and say, hey, don't send that money over there. And then the bank is going to say, well, you're going to have to get released from Franchise Tax Board. And that basically has to happen. But sometimes they don't find out about that hold for 2 or 3 days as they've went by before. And now you're down to they're going to send the money in 3 or 4 days, right? Mm-hmm. So you don't have time to go to collections. You don't have time to go to normal channels because, at certain points in time, it's really difficult to get through. And I'm sure everyone's experiencing that. And the employees at the Franchise Tax Board and the IRS, I'll be honest, they are doing the best they can. And they are quite friendly when you get a hold of them. The only problem is, it's just tough. They're overwhelmed in terms of calls coming in.
Yeah. And I think, you hit on a good point there. I think the first thing that happens if anybody's contacted by FTB or the IRS, it's instant panic. You get a letter and you're just like, what in the world do I do? What's going on? How can I help? How can I be helped? And I think people think, well, if I just throw the letter away or just move on, it'll just disappear. So I think it's great. Like you're saying, the name says it all, advocate. You're there to try to help them through the process.
Right. And there's certain situations where you really you can't help.
Yeah.
There's one case where, and this guy, he's a friend of mine, and he was in construction, and he just kind of worked under the table, right? And but at the same time, he had tax liabilities that were due. And he met the woman of his dreams. You know, she was an airline pilot. She made a lot of money. She had a lot of withholding taken out. She was used to getting anywhere between like a $15,000 to $20,000 refund each year. Okay, she was used to that. And so they got married, and her first year they were married, they filed a joint return. Now, if you file a joint return and there's a refund due on that return, it doesn't matter that, because he called me up, what can you do, man? I mean, it's my liability. I got that before she got married. And I'm like, look, dude, you filed a joint return. That refund, that's community property. He goes, oh man, she's gonna kill me. I'm like, well, you can't sleep on my couch because I don't want to get hit, But there was nothing I could do. And he goes, are you sure? I go, no, there's nothing, man. I mean, she should never file a joint return. File married, filing separate next time is what I told him. Needless to say, she divorced him, and they never filed another tax return again.
Oh my!
But he didn't disclose. He didn't he had all kind of issues. I was at the wedding. I started to tell her, but not my business.
Yeah, too late then. No, but yeah, that's a good point too. I mean, you're there to help, but sometimes you can't help. I mean, it's plain and simple. It still needs to be within the regulations of the IRS and Franchise Tax Board and California state law for sure.
Oh yeah. I mean, the advocate basically has a lot of latitude. It's a very powerful office, and there's things that you can do. You have direct contact with all of the program areas. You can actually shine light on an issue that really needs to be resolved as soon as possible. Many times I kind of disagreed with the action that had been taken, but just because I disagree doesn't mean they change it. A couple times I give some additional information and a change gets made. And then sometimes it's just, they says, hey, Steve, we've looked at this and there's nothing that we can do. But, the point you make is that, you have to operate within the parameters. There's even though it's an advocate, and you report directly to the executive officer, you still have certain constraints.
Let's kind of switch gears. So that's kind of what you did as a taxpayer advocate. And I know now that you're, independent and doing some things on your own, doing some consulting and helping taxpayers. Let's just talk a little bit about, how are you helping taxpayers now? What are some of the issues that you see and things you're helping them with? Okay, good. Okay, so currently, when you say taxpayers, I know our audience. There's just your average taxpayer here that's maybe self-employed, maybe a W-2 worker, but just in case we have business owners that I just kind of want to give it a general description of kind of what I do. Like, although I was the California Taxpayer Advocate, as you said in my bio, I'm an enrolled agent, so I kind of handle pretty much everything. I work with issues involving the Internal Revenue Service, California Franchise Tax Board, EDD, California Department of Tax and Fee Administration, formerly known as the Board of Equalization. The only thing I don't work with is child support, because I've had some people. Child support is really, really tough to undo, and there's nothing that's going to make that go away. You can't bankrupt it. Yep. You got some people come to me, hey, can you work on this? My kid is 32 years old and I'm still well, right. You're not paying it because you haven't paid it. The problem is they're still looking for it. Mm-hmm. So there's special. I don't touch child support, but some of the things I do touch, I get a lot of work from people who get filing enforcement notices, meaning California found out that you have let me turn this off just 1 second, because all right, California has basically a filing enforcement program where you have taxpayers that just don't think they have they need to file, or they basically know they need to file but they don't file. California is very sophisticated in terms of being able to determine if you may or may not have a filing obligation. So they send notices to taxpayers. Says, hey, it looks as though you have a mortgage and you paid X amount in mortgage interest, but we don't see where you filed the tax return. Right. How is it that you could pay this mortgage and not pay taxes? Of course, they cleaned it up. It's a lot nicer than that, but that's basically what they're saying. That's what because and then you have to file, get back to them and say, well, yeah, but I don't pay the mortgage. Somebody else do it. There's reasons why people could have a mortgage expense and still not have a filing requirement. Their income could not be taxable, but the bottom line is they'll contact you, ask you, and sometimes they actually do. So
I get a lot of people like I'm working on one now where finally the taxpayer moved around. Now they have a really good job, but they haven't filed taxes since 2013.
Ooh.
Right. So then, what happens, and this one happened at the federal level, because the federal, they get their W-2s, and the federal, what they'll do is they'll do a return. It's called a substitute return, not you actually filing it. FTB does the same thing, but they're filing an enforcement program. But bottom line is you don't get any deductions for the most part. So the tax is going to be like huge. So IRS basically had set him up for 2013 all the way up to 2018 with substitute returns that basically had him owing based on, because this guy was he was a W-2 person, and he had 1099, says he was self-employed in construction. So his substitute returns had a total tax liability of like $278,000 approximately. It's a lot of money, right? But that was based on them. He basically had, like, in one case, he had like $150,000 1099 because he did some work. But there's expenses that are associated with that as a construction worker, right? He's a general contractor. So bottom line is I had to do the returns, basically create the real returns, and basically it changed that, because with penalties and interest, that tax liability went above $300,000.
Oh, wow.
Yeah, so I was able to get it down to like about $200,000, but at the same time, I went ahead and tried to. I'm kind of going through an offer and compromise, trying to get them to settle for a smaller amount.
And that's a good point there too, Steve. Sorry to interrupt you, but just kind of thinking about that, I think
that's okay. My wife interrupts me all the
time. I think you can run into those situations where the penalty and interest and things that are due and owed looks completely terrifying to someone. However, the IRS will work with you as long as you're showing some good faith to make it right. Am I accurate in saying that?
You're extremely accurate on that. And I'll be honest, and 3 of the years I didn't know were substitute returns. I was actually preparing his offer after having done some of the other years, and the revenue officer, OIC officer, whatever her title is, she basically says, you do realize that some of these other older years right here, those are substitute returns. So I had to go back in and do those 3 years returns, and that's what knocked some more money off. So yeah, I would not have noticed that because those were so far back, I would have missed it. And she pointed that out, and it took care of about another 100,000, or close to it, like 75 or something like that.
Wow.
Well, and the same with franchise tax board. Here's the thing. Tax agencies, basically, they have a bad rep that goes back maybe like 40, 50, 60 years. And I don't know if it was deserved or not. But, even way before I left, people that work for the tax agencies, you have to understand they don't get a break on their taxes, right?
Yeah.
They, if they work for JCPenney's or Macy's, you get 10% discount or something like that. You don't get anything.
No.
And they also find themselves sometimes in tax situations where they actually owe. So, don't get me wrong. Every once in a while you get a little hater that says, well, shoot, I got to pay my taxes. You pay your, but
right.
Those are far and few in between. And I basically haven't come across any of those. And anytime I'm working with the government staff or tax agency staff, they're more than willing to help. And so they're there for you. Even the collectors, every once in a while, some of them might have had a bad day, and they, they answer the phone, hello, what do you want? No, they don't say it like that, but that's the feeling you get. But,
right.
But the bottom line is you talk to them right, and they talk to you right. The mistake that some people make, and I'll kid you not, it happens all the time, is that they try to get verbally rough with the person on the phone with the government agency. They're not paid to take, a whole bunch of screaming at, name calling, and you still have people that will try to do that, threaten their, here's one thing they don't do anymore. They don't threaten to go get their congressman because they know that's a waste of time. So they beside themselves and just kind of talking trash, and
right.
They'll hang up on you. Government agent employee, they'll hang up on you in a second. But yeah,
you have to have a professional. A professional will navigate you through this process and help you. I think that's the bottom line here. Is
they will. Well, okay. So now you're talking about a professional. Okay, you're right. In certain cases, that's a huge mistake that's made sometimes, is where a taxpayer will try to resolve something and they'll make it worse. Mm-hmm. They think that they can do it themselves. There is a definite need for a professional in certain instances. Towards the end there, we'll talk about some things that they can do themselves. But you brought up a good point. Hiring a professional, but you have to hire the right professional. You understand what I mean by that? I mean, there are people that there's certain things I don't touch because, and I've worked a lot. I work a lot of different stuff, but I don't. Certain unitary issues I don't touch, and that's like very complex corporate reporting, multiple states. Don't get me wrong, I can do it, but I don't trust myself to be able. It would just be too much for me. I don't have enough. I'm self-employed by myself. I don't have the resources to run it through a review, and so I don't take certain types of work. But you do have people that will take work that they don't understand. I'm cleaning something up right now. Someone said they needed returns done. This guy was an entertainer. He went and he got his returns done, by his cousin's sister's baby mama. I don't know who it was, but the bottom line is they basically, they did tax returns. But what he didn't tell him was that he had W-2s, but he also had a S-corp on the side that basically had income too, but he hadn't filed his corporate returns, and an S-corp basically has to flow through the income to the individual. So she did those returns based only on the W-2. And so those returns are wrong because she didn't include all of the income that he has. They're all wrong. And I don't know what he paid, but now this was a guy that I talked to just last week. And, on the go forward, I can work with him, but, I can't do anything with those older returns. He wants me to get his corporation back up. And that's, suspended corporations is another thing that I work with, or suspended LLCs. But bottom line is, you're right. You have to go to a tax professional in certain situations, and a tax professional that kind of, they know their limitations. There are certain things that they shouldn't touch.
You can get over your skis pretty quick.
Real quick. Just like I said, there's still stuff I don't really mess with. I just don't. The learning curve is too expensive for me. Sure, I could do it, but after doing all my research and everything, I'm paid $3.50 an hour for doing that. It's like I can't work like that.
Yeah. Yeah, I think people jump into situations like, oh yeah, I can do this return, and then it's, holy cow, what am I doing? Well, we'll see if this sticks.
Well, sometimes it's really not the practitioner's problem, and sometimes it's just the taxpayer not disclosing everything that they have going. I basically do my consultations not in writing. I do them over the phone, and I'm telling them, I'm like, look, you need to tell me. You need to tell me. Don't think that you can tell me and make up an excuse. I'm going to find out. I'm going to do a transcript. I'm going to find out what sources of income the government thinks that you have. Mm-hmm. So don't. You might as well tell me. Tell me now, because it's not like I'm gonna give you a price, and if the facts change, that price is gonna stay the same. Because if you're gonna shortchange me in terms of the information, and I'm having to do additional steps that I didn't know I was gonna have to do, then you've got a choice to make. Tax controversy work is something that you don't put it on layaway. You get a retainer or a fixed fee paid in advance, because if they haven't paid the government, then they're not gonna pay you. So always be upfront when you're talking with your tax professional, if you're going to have one, so that they can properly diagnose. Ooh, that sounded pretty good. I sound like a doctor. But anyway, properly diagnose your situation or your problem, and make sure that they can move forward with what's actually needed to get you on, back in good standing.
I think there's like a movie quote somewhere, right? Like, help me, help you.
Help you. Tom Cruise. Yeah, show me the money and all that. Yeah.
I think that would fit in this situation.
Yeah, and I've actually used that line before. Help me to help you to help,
Yeah. Yeah. I mean, at the end of the day, you and the taxpayer are presenting something to the IRS to be, received by them and scrutinized by them, so to speak, but you're presenting it to them.
Right. And I'm gonna give a tip too for
that's what I was gonna lead into. That's great. Give us some tips our audience can leave with here for sure.
Yeah, because I don't know how long we have, and but some tips. First tip, that's a continuation of what I was getting ready to say was, well, first step, like I said, is to be upfront, and sometimes, just make sure you explain your situation. Tell them that you don't know what you don't know. If you don't guess, I was talking to the guy just yesterday on another issue. I says, "Are you an S corporation or a C corporation?" And he goes, "So he just said, I knew he didn't know."
Yeah. Pump the brakes.
Don't say that. Yeah, I think I'm a C corporation. No, you don't think. What I do going forward, we can figure it out, but don't give information. If you don't know, say you don't know. When you're working with people, when you're working with someone that's trying to work with you, make sure you do not try to, just not share some information. It's best to be upfront. Now, also keep in mind that as a tax professional, there's certain things that if you tell us, we might have to walk away from it just because of our ethics. It's like, well, I got this drug business on the side, and I don't want to, I don't want to hear that,
Right.
Because I can't. I mean, basically, I can do a tax return because illegal income still has to be reported, but you can't deduct any expenses. Mm-hmm. But no one wants to do that. So you have to be careful. I'm not advocating hide your money, but I'm saying if I'm your tax professional, I want you to be honest, but make sure you understand that I can't move forward with anything that's going to jeopardize my license or put me in a situation where, I'm culpable and,
Yep.
I can get in trouble too. So, that. When I say be honest, I'm also saying make sure what it is that you're telling them is something that's not going to cause them. If you want to be 100% upfront, but nobody is. I'm going to say that nobody is 100% upfront. You just don't know. You just don't know that someone's being 100% upfront, and so as a practitioner, you have to assume that there's other stuff you don't know about. But I'm comfortable moving forward. Generally with whoever that contacts me. Only one time I kind of bailed right in the middle of representation because the taxpayer basically, it was the IRS, I believe, they wanted the guy's financial statements, his bank statements, right, to show that how you spend your money. And I got the bank statements, and this guy owed about $1 million in taxes. So this guy had bank statements, and what's the place that shows the blue bottle, Tiffany's. So yeah. there was receipt, there was bank statements, Tiffany's, and it was like some huge, large amounts. And he was trying to say he couldn't afford to pay. I'm like, man, your bank statements, you're at Tiffany's here. That's a $20,000 purchase. What was that? And he goes, well, don't send them that page. I'm like, what?
Yeah, just remove that one, huh?
Yeah, just bank statements say page 1 of 10. So you're gonna leave out 3 pages, and I says, no, I can't do that. So I says, I can move forward with this, but I will have to send all pages. And he goes, okay, well, thank you very much. I'm not going to need your services no more. I let him fire me, which is okay.
Not worth it for you. No way.
But not worth it. Plus, he paid me up front, So, you can't expect me. And that's part of my statement of work agreement is like, if you misrepresent yourself and you want to pull out, I don't have to give back everything you gave me. If there's money left on the retainer, sure, I'll refund that. But for the work I've done, no, you just can't, pull out like that.
Yep.
All right. Second thing that tip I want to give is for those taxpayers that are seeing those commercials that say, do you owe IRS $10,000 for, just a second, do you owe the IRS $10,000 or more? And, we can settle for you for pennies on the dollar, right? You've seen that stuff, right?
Yep.
I'm not trying to take away from their necessarily from their business, but you have to keep in mind that in many cases, what I'm finding out, because I do get some residual from the pennies on 99 cents is pennies on the dollar. You understand?
Mm-hmm.
And there's fees that are associated with, with having them represent you. And in many cases, all they're doing is putting you on an installment, a payment arrangement. And many times you can do that yourself. You don't need a practitioner. A lot of people don't need professional help to do a payment arrangement, especially if you don't have to do anything except, I mean, you're a W-2 worker, you've paid, you filed your tax returns, you just haven't been able to pay what's due, just, you can go online and do an installment agreement yourself. Yep. If you can pay it off within 5 years, and when you do that, make sure you set the monthly payment as something you can afford. Start low. It'll tell you if that's not enough. That's not enough. Then you put another amount in. Then but you can do it yourself. So some of that offer and compromise, it'll start out with pennies on the dollar. Then they'll evaluate your situation, and they'll come up with the fact that, well, we can't do an offer for you, but we can get you on a payment arrangement, something that's comfortable for you. You could have done that yourself.
So definitely do your research before you just jump in and have somebody look at these cases. Make sure you're going to the right folks. Do your research on it.
Well, let me define research for most people.
Yeah.
Because that's one of those words. I mean, research. Yep. Here's the thing. If the government feels that they can collect that money from you, I mean, don't forget there's a 10-year statute of limitations for federal, a 20-year statute of limitations for state. If they feel they can collect that money for you before statute runs, they're not going to give you an offer. Unless there's some extenuating circumstances. Like if you're a 25-year-old person and, you might not have a degree, or you might have a degree. It doesn't really matter. You're 25 without significant health issues or anything like that. You're going to live a long time. They're probably not going to sell for pennies on the dollar. I mean, don't get me wrong. I mean, there's cases where they have settled, but usually there's some extenuating circumstances that allows the IRS to say, okay, we'll go ahead and take, but they're not giving them, 5 cents. I mean, 5 cents on the dollar, 10 cents on the dollar. It's not as it appears to be, and it's not always offering compromise. It's like when you go in. And they try to talk you into buying a Porsche when you went in to get a Volkswagen, but it's kind of like a reverse type of thing. You end up with something you didn't go in there for.
Gotcha.
All right. Other thing, I got some notes here. Filing your tax return. This is one where practitioners get upset with me because I'm like taking money out of your. Some people don't realize that. They can do free filing themselves. I mean, since I am talking like regular taxpayers, if you're a W-2 employee, both IRS and franchise tax board, they got free programs out there. You don't have to go to a tax preparer because, you have to understand, for me to run my software, just to do your return can cost anywhere from $75 to $150, depending on what I'm doing. Just your basic return is probably going to cost me at least $50 just to run the software, because they charge you per return. And so I've got friends and, like people who I know. I mean, don't get me wrong. Their tax situation is not complicated. I got to go see my CPA. I'm like, well, why? To do my taxes. I'm like, well, why? What do you do? So why don't you just do it online yourself? So I asked, I totally have made comments, and I recommend it. If your tax situation is pretty much your W-2 employee and you're not filing long form, and even if you are in some cases, you can pretty much use an online program with the government, with IRS and the franchise tax board, where you basically file your own return. You don't have to pay anything.
Same scenario there too. People can get over their skis pretty quick, so make sure they know what they're doing.
I'm talking about the very simple ones.
Yeah,
I'm talking about you just work for an employer, one employer, you and your wife, one employer. You got W-2s. You don't have your itemized deductions, and I mean, there are things that once you start itemizing that, and if you have a Schedule C, then I think you do need to be careful. I don't think you should do your own return if you've got, if you're self-employed, especially if you've got, not a significant income. Let's say that word, significant income. You might want to get help because you may not be writing off everything you're entitled to.
Yeah, those Uber, Lyft drivers, things like that, they can get into some. They can definitely hurt themselves.
Right. Yeah. Well, because the thing is, they're self-employed, and what most people that are self-employed don't realize is you've got to document your expenses.
Absolutely.
Your income is tracked electronically, so there's got to be no question on that. So your expenses, you've got to document them. You've got to properly document them, and that has to be done throughout the year. You can't wait to the end of the year and say, "Oh, just put me down for this." I mean, that's supposed to be supported by mileage logs and things like that. And that's any business where you're using your vehicle. And that's a good segue into my next thing. If you are self-employed, just keep track of your expenses. I mean, they've got like apps for your phone where you can take pictures of receipts and things like that. Or if you want to do old school ghetto way and just throw it in the shoebox, every month. And it's going to take you a while, right, to do that at the end of the year. But you save your receipts.
Just dump that shoebox right on your desk, right?
Not mine. I don't do stuff like that. You try that stuff. They have food and stuff on the receipts, man. I ate spaghetti. I mean, it's got mold on it because they had it in January last year.
We laugh, but keep your receipts, keep track. That's a good tip. Great tip.
No doubt. And so, again, like I said, I can pretty much talk about this stuff all day, and I don't want to just keep it going. And I apologize if I joke too much, man. I can't help it. That Gigi knows that's my style.
I mean, taxes are stressful enough, right? And if you have to be stuffy and really tight about it, that makes it worse. So we might as well have some fun with it. Oh yeah.
And I guess another tip, I just saw my notes. Hey, if you're getting married and if you're marrying and if you're not like 16 or 17 getting married like Romeo and Juliet, there's probably going to be some history with each of you with regard to, your financial past. And that's one of the things I think people should be upfront with. And, they might not want to give details, but before you get married and file a joint return, you can get married, just don't file a joint return with them. You want to, because like the situation I gave earlier where the lady was waiting for her refund, it's okay to get married. It shouldn't be one of those things that stops you from getting married, but make sure you file marriage filing separate. California's a community property state, so you still have to be careful of being required to split income. But there's situations where you just claim your income and he claims his because you don't know what he's doing. So you just claim yours and he claims his. So there is an argument that can be made for you to not have to take on half of the other person's income. So that's a huge one right there. I mean,
that's a pretty easy question, right? If you ask anybody that pays taxes, right, when they do the return, if you ask them, how much did you get back last year? I guarantee they can almost pull that dollar amount within the dollar and know what it is. Or if they owe, they definitely can tell you how much they owed last year. So I think that's a good one. Ask your spouse before you get married, hey, how much did you get in your refund last year?
Yeah, well, unfortunately, Brandon, it's not that simple. I told you a minute ago where someone hadn't filed a tax return since.
Well, you got those. You got those.
Yeah. I mean, you got a lot of those, dude. I mean, I gave one for 2013. I can't give a percentage because I don't have a clue. I just know a high volume of the work that I get are people that are not current, or they filed a tax return and they think they're current, but they get audited 2 years later. And so you're getting audited for a 2018 or 2019 tax return, and they found out that you cheated really bad, and now you've got a $100,000 liability on that return, right? So when you got married, you thought everything was good, so you married this person, right? And then you file a joint return with them the next year, but then this old liability from when you weren't married to them comes up, and what that means is you won't get your refund if you file the joint return. So it can be complicated. It's really, and this is something that happens way more often than you realize. People don't talk about tax problems.
Yep.
They don't like to. They're embarrassing.
It's like the dirty little secret nobody wants to talk about.
It is, man. The scarlet letter, man. You got the big I, the big R, the big S on your forehead. It's like, scarlet letters or FTB. No one talks about it. You know what? And because of confidentiality rules, you can't call the IRS and say, hey, does my future husband, does my future wife, how much do they owe? Now, sure, you can request each other's transcripts and take a look at them. Let's open this up, But, I mean, how good is that for a relationship? How romantic is that, right? Sitting down with a glass of wine. let's go over our tax transcripts. That's worse than signing a prenup.
Things you'll never hear, right? I think we're going to see that happen.
Yeah. Anyways.
All right, you got one more tip for us?
One more tip. Let me look at my list here because there's always plenty. Don't hesitate to use the Taxpayer Advocate if it's a situation where time is of the essence. I know I started off by saying, you got to go through normal channels, but I did get some examples, right?
Mm-hmm.
where, the payroll, the woman that needed to pay her rent, but when you call them up, make sure you explain the urgency of the situation, the timeliness, and be cordial, be nice. Crying doesn't really help either. I mean, they'll feel sorry for you, but you
didn't get them in that situation. You're just trying to help them.
Right. Yeah, cause I tried the cry thing myself, but it didn't work either.
Didn't work. Yeah, that doesn't get me anywhere either. All right. Well, Steve, I thank you. This has been fun. I think you shared some good tips and really explained what Taxpayer Advocate is and what you do now and what you see now. And people can get in situations. It can be a taxing situation. You can be very stressed and worried what's going on, but you just know that there is help out there.
There is, and there is certain things that you yourself can do. It's not going to, and always open that envelope. Okay, that's the final tip. You get a letter from the government, just don't file it, don't throw it away. Open it up. You need to see where you're at, because one day you're going to go to use your ATM and it's going to start laughing at you. Because
the IRS doesn't send those by mistake.
No, they don't. The franchise tax board and franchise tax board, they'll find it way before the IRS finds it.
Yep.
So yeah, don't ignore it. Do something with it.
Great, awesome, Steve. Well, thank you so much. We really appreciate it.
All right, Brandon, you, Gigi, you guys all take care.
All right. And as always, everybody, if you have more questions or want to find more tips, please visit the CTEC website, ctec.org. Thank you.